Hey, good day. Welcome to the Stocks with Josh show. Well, the markets almost went green today before puttering out in the last hour. Today is Technical Tuesday, and we're going to do a thorough dive on some of your favorite stocks. But we're going to start off by talking about some crypto. And most of crypto is in the neutral or gray area today, except for three outliers. I like to look at the outliers because when the market's not doing great and you see a couple stocks doing great, it means they might move faster and better than the rest of them when the market picks back up again. We saw that XRP and Doge and SHIB were today's outliers in crypto. I also want to cover some interesting articles on the MooMoo app. They do not charge for their news as a subscription service, but in my opinion, it is comparable to many subscription news services. The first article is Pro Traders Are Working the Stock Options Market. This is very important. I talked with you guys about this last week, that pro traders were betting on the market to go down. They had a record amount of puts purchased, $10 billion in puts, expecting a sudden and violent move to the downside. Could that potentially be triggered by this CPI report that we have a couple days away from us? I want to talk with you guys a little bit about volatility. We can see the volatility index in the VIX or even the UVXY, and it is at its highest levels since June. Now, a lot of people consider that when volatility gets to this level, that it is signaling a potential buy and go long scenario. But what we have to consider is that we're in a volatile environment, which means that in the next week or two, we might see a move that is so violent that it would trigger buying. By itself, it doesn't mean enter. It just means that very, very soon, there's going to be a great opportunity for people to enter into stocks long and get a great price for them. That, in my opinion, is what the smart money is doing with those $10 billion in puts. They're expecting a violent move down where, as I've said to you guys, the analogy, other people are going to get tossed out of their seats and they're going to jump into those seats moving forward. The second article was by the IMF, the International Monetary Fund. This is a group of people that look at the economies of the nations. They take a global view of all the economies in the world. Now, what they said was that they are revising down their 2023 world growth estimate. And they cited the reason, persistent global inflation. And so this is actually bad news. It means that globally, all the citizens of the world are going to be less productive, make less money, and make less products, okay? And so you'd say, well, this is terrible news, Josh. But remember what I said to you guys in yesterday's video. In some cases, bad news is going to be good news. And this is actually bad news that's good news. They specifically said that the 2022 GDP will likely remain unchanged. They've called for a 3.2% growth in 2022, which means that for the remainder of this year, they're expecting that things are going to continue to be strong. But they're citing that 2023 is the problem, and they've adjusted that down from 2.9% growth, which is already lower than the growth expected this year. So they're going from 2.9 to 2.7. So they're telling everybody that this economy is absolutely going to be slowing down. They also said that there is an additional 25% chance that their numbers are wrong and that the GDP could drop below 2%. And here is a quote from the IMF. They've said, as economies slow down, calls for a pivot toward looser monetary conditions will inevitably become louder. So this is what they're saying, that there is going to be a global outcry for looser monetary conditions and for easing up and for pivoting. So I think that what they're saying is they're sending a message to Mr. Powell that you need to get ready. You can keep hiking as long as you want in 2022 because your economy is strong. But in 2023, you better get ready to fire up the old cash printing machines, and you better get ready to start easing because we are going to be in a recession in 2023 and we don't need tight monetary policy. And here's the thing, that's good for stocks. The recession is basically inflation solved by itself, and that is going to return to a positive momentum for stocks. And here's the problem that Mr. Powell has. He's behind the 8 ball. He is late to the game, and now he has to do catch up. And I've said it before in my last conversation about him that he has to out-hawk the hawks. He's trying to rewrite his legacy at this point. He did not raise fast enough. He called it transitory when it wasn't transitory. He gave a 10 basis point rate hike when we were already seeing out of control inflation a year ago. And now he has to do what he can do in the remaining months of this year where the market might still be strong, because everybody knows that the market's slowing down and next year he's going to have to pivot. So really, this is coming down to the fact that we've got the smart money with $10 billion in puts in an environment right now that's the same as June, that is conducive for some negative news that could possibly come out this week. We could see a great big leg down. And then at that point, we could see the smart money beginning to reverse and go long. Guys, hit that like for me and say hi in the comment section. Subscribe to join the daily conversation that we're having on this channel, and hit that bell so you don't miss out on any of these technical videos, because after all, today is Technical Tuesday, and I'm going to go into the charts on as many stocks as I possibly can to sort of catch you guys up on the opportunity that I see in those stocks moving forward. Go ahead and comment the stock that you want covered next week on Technical Tuesdays. So let's get into those charts. Okay, right now we're going to start with the SPX, and I'm just going to point out to you that according to our plan, we had these 3 days down, and now we are looking at a 1 day up. And as I told you guys yesterday, that I am hoping or anticipating some form of a move to come back and retest this line of resistance in which we have 2 touches at the moment. I'm looking for a third. If we get a really bad report ahead of us, it wouldn't surprise me if we simply consolidated in this area where we're currently at, and then we flushed down. So it is not guaranteed that we're going to get a move up, but as I've said before, we are looking at a past drop. When we had this initial drop and we had this massive move down, we spent a couple days faltering and creating a double bottom. We also had this small run up and then a repeat run down, and then we got another move up and an area of consolidation, and that's the same thing we've seen here. We're moving down, we've hit a spot of support, we've run up, we've come back and tested it, and now the question is, are we going to move up and get another area of consolidation before we move down, or are we going to get a move up and somehow come up with an extremely low inflation report and get some sort of a breakout and maybe even come back up and test a higher level of support, which might be this one here, which we also have 2 touches on. So we're going to be just keeping an eye on these things. The other big thing that I pointed out to you guys the other day was this bullish divergence on the S&P. I love bullish divergence because it's one of the most powerful and simple signals that the market gives us. We always keep an eye out for bullish divergence, and that's what we've got right there on the S&P 500. Okay, now we're looking at a daily chart of the U.S. 10-year Treasury government bonds. And as I've pointed out to you guys in the past, these also have a inverse relationship to the stock market, which means that as these move up, the stock market moves down. We have potentially a double top here. We saw that it came back up to this area of resistance. It got rejected. And I'm simply going to point out to you there is some additional room for this to move down tomorrow. Now, if that CPI inflation data report comes out really bad, then this could be an opportunity for it to move much higher and the stock market were to move down. But if it did not come out bad, this would be an opportunity for the US 10-year to possibly break this line of support and create a new trend going down. Now, as we pointed out, the SPX has bullish divergence. I want to point out that the 10-year Treasury bond yield actually has bearish divergence. So we're at the exact same height as we were just some weeks back, which is right here, okay? But we have lacked the momentum of buying on coming back to that exact same spot here. So this is actually bearish divergence, which means that the 10-year government bond could begin to be setting up for a breakdown, which would be an absolutely bullish moment for stocks. I want to cover Quant with you guys. I haven't talked about it on this channel much in the past. I have been purchasing Quant consistently with my other top cryptos, but I want to say that I wish I had purchased more because Quant has been defying the downward trend of these markets. From its June lows, it has absolutely been moving up and only up. And even though the market is currently sitting on its lows, here we have Quant pushing right up to its very top, looking for a breakout, hitting this area of resistance. And possibly, if we get a breakout, we could be going back to all-time highs on this stock. But I am not saying to go and buy Quant. I actually would say be careful at this point, because if it fails this particular breakout, it could easily come back and test this trend line. And I would actually tell you that you'd be much safer looking for an entry around $120 if you haven't gotten into it before, and you'd also want to make sure that it held this. In addition to all that, we have this other very bullish story, which I've talked with you guys about many times. When the red 100-day moving average line crosses over the green 200-day moving average line, that typically begins to say that there is going to be a much longer transition up for the crypto. And so that's what we've got right here. That's a very bullish signal. And as you guys have heard me say before, that when you're above the 50% mark on the RSI, what do I say? The bulls are in charge. Clearly, the bulls are in charge of Quant. So this is one to keep an eye on, not just now, but looking forward into the next bull run. Look at this bullish momentum. It's incredible. So now we're looking at ticker TAL, T-A-L, TAL Education. You guys know this was a trade that I brought to you guys. Unfortunately, on this trade, we've had a breakdown. We were trading this very solid trend line, and we entered in right around here looking for a very strong move to the upside. Breaking up to around the $8 mark was our target, but it really just hasn't gotten it. It failed this movement. It came back down, and it was feasible that we might have considered getting out. I had never entered a full position, but I thought to myself, I had entered around 20% here, and my game plan was to enter 40% when it came back here and to accumulate in this range. But ultimately, I had a stop loss set. I had adjusted it quite frequently. When we saw this breakdown, my stop loss of $4.40 got triggered. We saw this massive move down. Yes, we got a little bit of a green day, but I can't say I'm very bullish on this stock simply because it hasn't performed for me. But I think it's extremely important that I point out to you guys something that we should keep in mind about this stock if you have it and you're holding it and you haven't gotten kicked out of it, which is where this stock is at currently. I'm going to point out to you that from its June lows, TAL Education is currently 136% above its June lows. So this is one of the reasons why I've mentioned to you guys that there are a lot of companies that had been beat up too hard in the past already and are not going to go back to their June lows. Here we are where most stocks have moved back all the way to their June lows or hit a 52-week low. We saw that in a lot of the big tech companies. But here, these guys are 136% above their June lows. So even with this drop, I wouldn't say that TAL Education is doing very badly. My guess right now is that it very likely might come back up and test this line of support, and it might become a line of resistance. So I'm expecting that this likely will get back to around the $5.14 mark pretty soon. At the moment, I haven't gotten back into it because I've simply got my eyes on other stocks, and I've been moving my money around in other investments that I'm slightly more bullish on. In my opinion, TAL Education is still looking bullish, but I haven't made money on it yet, so I'm trending to go back to things I have made money on. Okay, this is Fuel Cell Energy, FCEL. You guys know that I got into this around $3.06 the other day when it was on its lows. We are actually not doing so well with fuel cell overall from the standpoint of it currently sitting on its June lows right here. And so this hasn't had tremendously bullish momentum. However, I have liked this stock, and I had made a ton of money on this a year ago when it had run up so much. And I've been thinking that I wanted to get back into it at some point. And when it came down here, it was a falling knife. We saw it come and hit this mark back in February, and we saw this nice, beautiful dead cat bounce. But eventually that got completely eliminated in June. And now I consider this a period of consolidation. And so anytime it comes down to this $3 mark, I've decided I'm going to add to my position. I want to caution you, I've done some technicals on this, and I think that it has a truer range of support around $2. So keep that in mind. If you want to get the very best price to make the maximum profit and you are not afraid of missing out, then you would consider accumulating this at $2 if it comes back there. I myself am imagining that this might be a level of accumulation and consolidation, and I'm going to try to pick it up every time it hits this range, or begin to buy between this range and the $2 range, increasing my buys as I go down. You guys know how I taught you how to do that with the verb. You know, if you start off and you buy $200 here, then you would buy $300 here, and you would buy $400 here. And this will end up giving you a much more dominant price moving average. So that's what I'm doing right now with FCEL. I do have a stop loss in directly because it popped up to 311 and it gave me a little bit of a range. I put a stop loss in at my buy price, which again I think was 306 if I recall. So I could easily get flushed out of my position. And the reason why I have it in, because I just told you guys I'm going to accumulate around $3, is we're moving into such a violent potential move in the markets that if this broke through this $3 support level, which has been here for a long time, I would then expect that I will hold off a little while and see where that new price down could be. Could it be the $2 range? So right now I've got a stop loss set at 306. If we hold the $3, then I'm going to just add to it over time. If we get a break, I'm going to see if I can get a better price around $2. That's the game plan with FCEL. I can't tell you that there is very bullish divergence on the RSI. If you look at it, there's that flat movement, which I pointed out to you before, that would show neutral action on the RSI, not bullish divergence. So this is simply in keeping with the price movement above, which means that as the price has moved up or down, the buying momentum has stayed consistent with it. The only thing I will tell you is that in the area of support, we're actually sitting on an area of support right here. This area around the 40% mark has been a buy range in the past for people getting into this, which is kind of what we've covered here, that this has been a historical level of support, the $3 range. We have to see if it holds up. If it breaks through, my stop loss will kick in. I won't lose anything, and I will then be looking and eyeing $2. I like FCEL. I like the momentum that it has. It doubled in price from $3 to $6 to almost $7 when it moved. So this thing likes to move. It has an audience, and that's the type of stock I like to get a great price at, because if it turns around or a good news story comes out, it's not going to move from $3 to $3.50. It'll move from $3 to $6, from $2 to $4. So that's what I'm doing with my FCEL trade. All right, this is Sunopta, STKL, ticker STKL. And in general, I just want to say that this is an example of a bullish chart. We had back here this period of consolidation, this sideways movement, and price compression, which I've talked with you guys about. And eventually we got this beautiful breakout. And the main thing I want to point out to you is that ultimately led to a crossover of the moving averages, the 100 above the 200, and we have maintained it. It has been steadily moving up. We're in another range of potential consolidation. But as long as we stay above this 100-day moving average, I'm expecting a new leg up on STKL. So what we want to keep an eye on for this one is that we don't lose the 100-day moving average and break beneath it. That would be bearish if we broke beneath the 100-day moving average, and there's where your stop loss should be set, directly beneath it. As the stock moves up, you can move up your stop loss. If the stock moves down and touches it, your last zone would be around $9, and that's when you'd want to get out, because if we lost the 100-day moving average, then we're probably going to lose momentum on the trade and come back and get back to the $7 range or even the $6.50 range. So we need to be mindful of that. Right now, the STKL trade is in motion, and I want to point out here the same thing I pointed out on TAL, that this is actually 121% up from its June lows. And that's the type of companies that we want to be in right now, because if they're doing well when the market's falling apart, it means they'll do better when the market recovers. Okay, this is Chargepoint, ticker CHPT, and we have been trading this for quite a while, and we have a defined range that I determined quite a while ago between $10.50 and $13. And as you guys can see, this has held up very well. If you have taken a position in Chargepoint at around $13 or below, you've had a couple times and a couple opportunities to make that a profitable trade, a pretty profitable trade. We identified that the sell zone was between $17.50 and $19.50. But one thing that I want to point out is that you can see that the sell zone and the buy zone have been getting lower. So here are the things that I want to point out to you. One, I want to point out that the RSI is flat. We don't have bullish divergence. That doesn't necessarily mean that this isn't an ideal environment to buy. I also want to point out to you that we're getting a nice area, a line here of support. This could continue forward. We're getting a little bit of a squeeze zone right now, though. If this doesn't continue forward and we get a break, we could begin to see that lower low that we had back at around $10.50. But in general, if you have purchased it between $13 and $10.50, it has proven to be a profitable trade for you guys. So I would be keeping an eye on this, and you have the entry point of 13 that you would then slowly fade into your position by buying gradually from 13 down to 10, of course, considering that your largest purchases would be around $10. Now, we could see this line of support hold, and we could see it come back up and retest this line of resistance that has been slowly descending. That's where we're looking at right now with Chargepoint. This has been a profitable trade as there's been more than one opportunity to get in and out at a good price. I want to take a minute and look at Ethereum in regards to all cryptos. Bitcoin is really the one that you normally want to look at globally, but I will tell you that I'm actively involved in a large Ethereum trade. I brought it to your guys' attention a while back. I bought right here at 1280, which had previously been resistance. As the crypto moved up, we found that it came back to 1280 and has been support. So I have a large position right now sitting at 1280. And I'll be honest with you, I'm a little bit nervous because we're definitely moving into a period of what I'd call compression. Now, compression can be extremely bullish or bearish. What it basically means is that the price range is tightening up, and it's get ready for basically it's going to shoot out one way or the other. And so we don't know which way all this is going to go. We know that there's going to be some volatility ahead with this inflation report, but 1280 was my position where I chose to buy, and I am positioned to see where it's going to go. The bullishness I want to point out on Ethereum right now is, again, that even though this price has remained consistent, right, or flat, we see that there is actually less selling. So we see a bullish divergence on the RSI. So if there wasn't bullish divergence on the RSI, then this would look more like this. It would basically be looking more similar. The selling patterns or the selling pressure that measures the RSI would look very similar to the flatness of the price. But that's not what we've got. We have the selling pressure is diminishing, even though the stock price is staying the same. So that is bullish. I'm going to refer to it as mild bullish, but I also see that we have compression here. So we are getting geared up for a pretty large movement. This was a period of consolidation, but not quite compression. But you see that after it gave us this nice move up. Perion Network, ticker PERI. I originally made this call for you guys back on July 18th when the stock was here. And as you can see that in general, if you'd bought it that day and held it, you would largely been up around 33 to 34%. So on Perion, we have both a descending line of resistance as well as an ascending line of support. And we've sort of been in a stage of consolidation and price compression, and I believe that it's very possible that if we continue this bullish momentum and that 100-day crosses back over the 200-day, which we had here, okay, if we get another crossover, we would then come up and test this 2640 range. We probably would move up, and then we would begin to have to work against it to get a breakout and to eventually move to all-time price highs. That's what's going on in Perion. Of course, an area of consolidation and compression like this could break down, and we could go back and test our long-standing historic line of support, which is around the 1760 range, which at the moment, that would probably be an opportunity to buy because this stock has overall been moving bullish. SOFI Technologies. SOFI's Technologies is nothing that I've actually ever traded or owned, but I get a lot of requests for it, so I'm just going to give you some brief observations on the technicals. What I want you guys to learn and take away from this conversation is just some very simple things. Here, look, on the RSI, where do we have all of the momentum? We have the momentum which is controlled by the bears. We know that because it has largely been on the bottom half of the chart. This is the 50% mark, this is the 30% mark, and this is the 70% mark up top. Anything below the 50 means the bears are in charge. We know that very briefly the bulls made a move for it right here, which got a little bit of curvature of the 100-day moving average, but largely the momentum has been flat. There is not bullish divergence on the charts. However, what I can say is that we are at an area of support, and so this could potentially be an area where accumulation would be wise. If you were bullish and you were expecting that we would get another move to the upside and the potential of the 100 crossing the 200. But at the moment, I would say that there is not strong bullish technicals coming from SOFI, so you've just got to keep that in mind. If I were owning it myself or bag holding it, I'd probably hold off on buying any more and see what happened after Thursday. If we had a massive breakdown, then you have to ask yourself if you want to accumulate. Because remember, when a line of support gets broken through, it then becomes a line of resistance. So imagine SOFI at $2 and imagine that your goal is for it to break back above its long-standing line of support at $5 or $4.97. You've got to keep that in mind. So if we get a breakdown on SOFI, I'm going to tell you that it's likely to go to $2. If this area holds, then and we get another move to the upside, then we would get this 100-day moving average line to begin to curve up and eventually cross over the green 200-day moving average line, and that could open up to an environment of it returning to more of a bullish state. But at the moment, to be clear, it's bearish in my eyes. So hey, we're going to be looking at Tesla now, and Tesla is a controversial stock. As I've told you guys before, I identified quite a while ago that Tesla was in what I'm referring to as distribution, which typically precedes an area of decline. We saw that in recent days, Tesla has dropped from, around 320 all the way to 215. And so we have to ask ourselves, are we at a place of support where we could potentially see a bounce? And here's my thoughts. I want to just point out one thing on the RSI, that we are in oversold territory. And every single time that we have come down and broken over that 30% mark and officially entered into oversold territory, it has been a good idea to buy Tesla because a big move up has followed. So when the last time we got oversold and we were at 220, well, then there was $100 to $120 move to the upside impending. And here we are again, we're in oversold territory. And so if I had to personally make a buy, I either wouldn't touch it or I would go long on Tesla and imagine that this is an opportunity and that we might come back and retest this 320. We could be in an extended period of accumulation or reconsolidation in Tesla. And so it wouldn't shock me if we got a number of moves in that range between 220 and 320 or 210 and 310. So that's kind of what I'm expecting. I wouldn't go against Tesla right now because there could be an easy violent move upwards on Tesla. But in that same breath, if we officially break this current range right now that we're sitting at, which is around the $215 range, then yes, we are likely going to go and hit a $180 Tesla. If I were to buy Tesla, for me right now would be gambling because I don't think the charts are extremely clear. But if I were to buy it, I probably would choose to go long because I don't think the Tesla story is over. I think it has a lot of bulls and bears that fight over the direction. And I think there's more bulls than bears who are going to be interested in fighting over the long-term direction of Tesla. Those technicals in this video today were sponsored by MooMoo. As always, you can get a link in the description of the video so that you can download the MooMoo app and join my community over on MooMoo. If you open and fund your account, you can get up to 15 stocks. But if you put in just $100, you're guaranteed 6 chances at stocks valued at $2,000 each. Get the exchange, get the free money, and find me over there for more conversations about stocks and crypto. That's it. That's all we've got time for today. I'm expecting tomorrow to be bullish, and I'm expecting Thursday to be volatile. But we covered some great stocks. Again, let me know in the comments section what you want me to cover next week on Technical Tuesdays. I'm covering crypto tomorrow as the day I'm hoping will be bullish, and I'm going to bring you guys some interesting insights into the crypto market right now. I hope you enjoyed the technicals today. As always, peace and blessings, my friends. We'll see you tomorrow.